I hope everyone and their family are doing fine and safe during this lockdown and have endured this lockdown, which has extended to over 72 days. And I hope people are keeping themselves fit and healthy. I would like to welcome you all to this session of the webinar, which is basically on the ECA-backed financing, which is an alternative to ECB or an INR financing for projects involving imported capital goods. Greenback has been conducting webinars which are more on the knowledge side, and the last few seminars has been on management of the FX and also on the liquidity management, more on the PNL side. But this webinar is basically on the balance sheet side, involving financing of project involving imported capital goods and mainly from Europe. So I'll give a brief introduction of our guest speaker. We have Mr. Arjuna Menon, who's the director for Ferrostall Finance Solutions, and he's a banker by profession with 17 years experience in the banking, and 7 years he has been on the as a dedicated originator for ECA transactions for the GCA and the Indian subcontinent for a German bank. And last 2 years he has been with Ferrostall, and his regions covers GCC, Bangladesh, and India. So he is having a core experience on the origination and also on the completion of this entire funding side. So we thought this is an ideal time to have this seminar, where corporates may be looking at an expansion or looking at an alternate way of financing. A brief background on Ferrostall. Ferrostall is a century-old company which was founded in 1920. It has around 750 employees worldwide, and of which 100 are exclusively dealing with the ECA-based transactions. A technology and OEM independent provider of financial solutions based on ECA and PRA coverage. They have well-experienced ECA financing experts, excellent relation with international and well-respected banks, and they have relation with almost all the ECAs around the globe. And they have successfully completed hundreds of projects under the ECA mechanism and PRA, which is the private risk insurance covered basis. So the relation between Greenback and Ferrostall is to bring this type of financing for the Indian subcontinent, and we have partnered with Ferrostall to introduce this concept and also provide handholding to the corporates who are looking at expansion and looking at an additional avenue for financing their imported capital equipment. So I hand over the session to Arjuna, who will cover all aspects, and after that we will have a Q&A session where you could post your questions onto the chat. So over to Arjuna.
Hi, good morning. Can you see me now? Okay. Good morning from rainy and cold Frankfurt, Germany. So we're hovering around 16 degrees Celsius, which is basically summer in Germany. Also, we already passed, I think, peak Corona. So daily life is going back to normalcy. Nevertheless, with still a lot of strings attached and a lot of restrictions. Zubo, thanks very much indeed for this kind introduction and also for organizing this event. Thanks to all of you participants. I'm really delighted to get the chance to talk to you a little bit about what we do at Ferrostall in India together with Greenback Advisory Services. As Zubo has already introduced myself as well as the company, and I think the primer that was sent out in the invitation gave you a short wrap-up of ECA financing. I'm in the comfortable position now to basically skip over most parts of the introductory part and the general part, and I would like to focus more on the special structure that we as Ferrostall use to help you with financing your transactions. So let's start. Zubo has already mentioned we are a 100-year-old company, 750 employees. At Ferrostall, we primarily do this transactions regarding ECA financing, but we also have other activities as well worldwide. We're working on railway vehicles. We do non-ferrous metals trading. And we do this in many locations all over the world, as you can see here. The company itself is headquartered in Hamburg. but we have subsidiaries and local agents in basically all continents of the world. But I'm here to tell you about something about ECA financing. So ECA financing, ECA is the abbreviation for Export Credit Agency. Export Credit Agencies are either government bodies or private sector companies mandated by the government, whose job is to promote exports of local industry. They do this through various instruments. One of the most common instruments is in credit insurance policy, granted to foreign banks that are able then to give you long-term loans at favorable terms and conditions for the import or for the financing of imported machinery and equipment. So if you have some prior experience with ECA financing, maybe you executed a transaction, maybe you discussed a transaction with a bank, you should be familiar with the scheme that you see right now on your screen. Just as a quick reminder, on the right-hand side, we would what we call the underlying transaction, so the actual export transaction, where you have an exporter and you have a buyer, for example, an Indian company. That's the right-hand side. On the left-hand side, you have the financing part of the transaction. You have a foreign bank that gives a loan to the buyer for their purchases from the exporter, and they themselves get this credit insurance coverage from the respective export credit agency. When I see this scheme, I want you to keep two things in mind, maybe from your own experience in your projects as well. When you look at your projects, I'm pretty sure you rarely deal with only one exporter and only one supply contract. You will be dealing with a plethora of exporters from various countries of the world, and you're looking for a solution to finance all of your imports. Zubo, you just started screen sharing.
Okay, do I shut it? Oh, okay, one more.
I think you override mine.
Okay, I'll just stop it.
Yeah.
Sorry about that.
Arjuna, your screen share is not showing.
Yeah, because Zubo's screen share is showing. It was replaced
even
by...
before that it was not showing.
It wasn't showing?
No.
Okay, then maybe Zubo, you show the slide, please.
Yeah, I have shown that.
Zubo, start screen share.
Okay, one second. Oh, sorry, I'm... Okay.
Okay, then slide number 4, please.
Okay.
The first 3 were just introduction. So what I told you is probably enough. We don't need the slides for that. Next slide, please. Okay, that's the first important one. Okay, then a reminder to the reminder: right-hand side underlying transaction with the supply contract. Left-hand side is the financing with the banks and the export credit agency. So as I mentioned, in your projects, you don't speak with only one exporter, but you're facing several exporters with several supply contracts, and you're looking for a solution that covers all the imports of machinery and equipment. Second point is that every single export credit agency has their own terms and conditions, but they all allow a certain amount of included third-party content. Third-party content, from their perspective, is content that's coming from a country that is neither the exporter's country nor the buyer's country. And we as Ferrostal basically give you a solution to bring those 2 points together. Can you go to the next slide, please, Subo? Okay, so basically we have the situation, you have a buyer, for example, the Indian company, that is developing a project, and it's talking to 4+ suppliers. Let's say 5 suppliers from various different countries, and they want to get financing for the whole project. In the structure, what we do, we technically act like a trading house. We can call ourselves an aggregator or a packager, in which we package all the contracts that you would otherwise engage with your suppliers, and then we engage with the Indian company in one supply contract. The elegant, this leads to the elegant solution that we can, with this one supply contract, approach a bank, and the bank can approach the respective ECA, and they will not look at the individual supply contracts. The basis for the due diligence and the basis for their financing is the one supply contract that we engage in with the buyer. Hence, we can help you maximize the equipment that is eligible for ECA financing. Yeah, can you go to the next slide, please? So this shows it in more detail, that we basically that's the second part that I mentioned, the inclusion of third-party content. So we can, through bundling all of the supplies into one supply contract, we can include supplier 1, 2, 3, which is from the majority content. So it's like that would be the second party content, and then mentioned before, the third party content that was mentioned before is the light gray box, which can also be included. Hence, again, maximizing the volume of the loan. Next slide, please. This at first looks a bit more complicated, but let me just guide you through it. This model also works for EPC contractors. I'm not sure if any EPC contractors are present at the moment, but maybe you're dealing with an EPC contractor who is not aware of this solution, so it might be an interesting point for you as well. So in EPC contractor, if you take the example of an Indian EPC contractor, who for their projects needs machinery coming from Europe, let's say majority Germany, then the equipment itself is eligible for ECA financing. Yet the EPC contractor, as it is a company incorporated in India, is not eligible to apply at the German ECA. In this scenario, we can act as a sub-supplier to the EPC contractor, package, bundle all the EPC contractor supplies, and then apply at the ECA on behalf of the EPC contractor, which means in turn that you as an Indian EPC contractor doing a project somewhere abroad, Africa, other Asian country, or maybe also in India, are able to bring German financing, or let's say European financing, despite the fact that you're not incorporated in Europe. Next slide, please. I think one important consideration is always what happens with the warranties, what happens with the negotiations regarding pricing, regarding technical specifications. So regarding the warranties, we have a contractual structure that basically routes the warranties around our contract, which means in turn you have always direct access to the OEM with regards to warranties. And on top of that, we are not engaging in any negotiations regarding pricing and technical specifications, meaning that you're the expert on your project. You know exactly what type of machinery you need, and you know what the proper pricing is. Hence, we will take over the PO as it is specified and negotiated by you. Next slide, please. I think this so far was a bit abstract, so let's just go through two case studies so you can get a better idea about what we bring to the table, how the financing of a project changes when we as Ferrostal are involved. So this is a project that we executed we have 30 suppliers, hence 30 different supply contracts from all over the world: Germany, France, Italy, Taiwan, China, and we have some local costs involved as well. So if the project developer approaches a foreign bank, let's say, okay, he looks at his sourcing breakdown and sees, okay, I have 51% German content. The minimum sourcing requirement for getting the German ECA involved is 51%. So he will approach a European bank, a German bank, whether the bank is interested in the financing. The problem is that the project volume is scattered over 30 individual supply contracts. This means in turn that the bank will be forced to more or less drop out all the non-German equipment. And even when they look at the German equipment, we have 35.9 million euro from Germany, but it's divided over 9 suppliers. So most probably they will pick the 2-3 largest suppliers and drop the rest, because for every single supplier they would need to include a different an additional tranche in the loan agreement. This generates costs. And if the loan, if the volume of the supply contract is too low, it's not economical for the bank to do the transaction. So you end up with a project that has machinery and imports valued at 70 million euros. But you end up, in best case scenario, with a 36 million euro loan. For the rest, for the 49%, you would need to find other forms of financing, albeit be it out of cash, local loan, and so on. The next slide, please. The next slide now shows what happens when you get a packager involved. We can bundle these 30 supply contracts into one supply contract with a volume of 70.1 million. The overall sourcing breakdown of this 70.1 million is 51% German content. So we then can approach a German bank and approach them with a 70 million euro transaction with 51% German content. Hence, it's 70 million is bankable, and with a 51% German content, it's also eligible for ECA financing, and you'll get a loan of the complete 70 million euros. This can get even more creative. When we go to the next slide. Next slide, we see even more complicated sourcing breakdown. You see there's a significant portion coming from Germany, 60.4 million euros, and another significant portion coming from Switzerland, 39.7 million euros. And again, the rest of the world. This, at first glance, might not look as eligible for ECA financing, because when you take Germany, we don't have the 51% German content that the German ECA will want us to have included. We don't have the 30 to 40% Swiss content that the Swiss ECA would want us to have. So basically, if we have this transaction with 33 individual supply contracts, it is not eligible for ECA financing. What we can do over at Ferstal, or what we do at Ferstal in this case, we can work with a multi-ECA transaction. When we go on the next slide, we can basically take the German content, fill it up with third-party content, then take the Swiss content, approach the Swiss ECA, and then fill it up with third-party content again. So instead of one ECA tranche, one loan, we have 2 loans from 2 different ECAs, yet you get 100% financing. You get financing for the 170 million euro import volume of imports. And next slide, please. So this is basically the services that we do over the project timeline. When you hear the word timeline, or when I say the word timeline, most of the times I'm asked how long does it take to get a facility in place. What I usually say is from mandate to readiness for disbursement, getting all approvals and all the documentation in place. In the best case scenario, it takes 3 months. Yet, as we have so many actors involved, I think 3 to 6 months is more realistic. So we will help you first with the structuring of the ECA loan. We can help you find banks for it. We'll do the negotiations with the banks. We'll do the application at the ECA. And quite important point is we're not a consultant. We don't stop there. We actually execute the transactions as well, especially when you have large transactions with many suppliers. This can also be helpful for your procurement department, that they don't have to deal with deliveries from 40, 50 different suppliers in a project, but only with one being Ferrostyle. Next slide, please. As we are located all around the world, and we also have a quite international team working in Hamburg and in our subsidiaries, we're also able to help you in negotiations in various languages, not only English, but also German, of course, French, Spanish, Portuguese, Russian, and also even Chinese. That's next slide, please. Okay, so there are a few advantages of ECA financing. So again, it's backed by the German government or by the European government through this insurance scheme. So the banks are able to give you very long tenors. It says on the upper right corner up to 18 years. This up to 18 years is for projects in renewable energy. In the manufacturing sector, you're looking at max tenors of 10 to 12 years, depending on the underlying transaction and the volume of the loan. This 10 years is excluding the delivery period. So if you have 2 years delivery, you have 2 plus 10 years, you end up with 12 years door to door. I don't want to go through all of them in detail, but I think the main takeaway is long repayment tenor, competitive interest rates, usually the collateralization and the security package that a European bank wants is much more favorable compared to Indian banks, and you free up your existing credit facilities, because the moment when you get a financing from your local bank, it decreases your availability for limits for other products. Of course, what you have to keep in mind is that you get a foreign currency exposure in case all of your revenues are denominated in rupees. But I'm pretty sure Manish and Zubu are able to help you in this regard as well. Next slide, please. So on this slide, you can see all the ECAs that we work with. I think takeaway should be all European ECAs. North American ECAs is no problem. Some Asian ECAs as well. But of course, our bread and butter business, the brunt of our transaction are in Central European ECAs. And on the next slide, you can see the banks that we work with. So we work with about 35 to 40 banks. These are the banks that we have in our portfolio. Of course, there's a core of, let's say, 10 banks where we do most of our transactions with. And based on the country that the project is in, based on the sector that the project is in, we will pick and choose the right partner bank and approach several, which is another benefit from working with us, because we bring more banks to the table, hence increasing competition on the banking side and thereby decreasing your cost of funds. Next slide, please. So just to give you an idea about what we need for the evaluation of your projects. So we need the financials of the last 3 years. We need the equipment list, of course. Important is the sourcing or the origin of the equipment. There you have to keep in mind that it is the important is the certificate of origin that the equipment will get. So if the invoicing is done in Switzerland, it's not sufficient for the ECA. So we need to actually need to know where the equipment comes from. A short project description, and usually like that's the standard operating procedure in ECA financing is we can finance up to 85% of the equipment volume. 15% has to be as a down payment. Next slide, I think then we have it. Yeah, I think Subodh, do you want to maybe say something about the foreign currency exposure of Indian companies and their considerations?
Yes, sure. Manish, would you like to?
Yeah. So today, you know, as borrowing and banking gets more and more difficult, I think we have an option in terms of ECA financing is to tap the international market. And since this is backed by the ECA cover from an insurance company and by which makes the project far more appealing to the bank for financing, and you can get longer tenors. Of course, for the hedging side, the cost of hedging is around ballpark 4% on the currency side, plus the CCRS will be around 6%. So, you know, so first my question to Arjuna is, if you could indicate a range within which we can get a cost for the ECA loan, so we have an idea of, you know, where the rupee cost would eventually land up at.
Yeah, so the costs attached to an ECA loan are first of all the rate, the interest rate based on a base rate, usually so Euribor or LIBOR. That's the one cost. Then there will be the bank will charge an upfront fee. Then we have the insurance premium. The ECA will charge an insurance premium. This insurance premium can be financed up to 100% as a separate tranche under the loan. So it is a cost of funds, but it doesn't drain your liquidity compared to a private risk insurance, for example. We as Ferrostal will act as we are acting as a trading house. We'll put a trade margin on top, but we're fully transparent about that because, well, you finally negotiate the prices with your client. You know exactly what we put on top. This is also considered German content and is also 100% financeable, 85% financeable under the loan. I think if you put all of it together, annualize the upfront fees. I think when I was in Mumbai, we made a ballpark calculation. I think we ended up at 2 to 3% over LIBOR.
Yeah, I think it was around 2% over LIBOR.
Yeah.
And depends, of course, on the tenor. So I would say that on a fully hedged basis, we would be anywhere between 8 to 8.5% on rupee terms. So that is what the number would be for a rupee cost. And we would typically look at a tenor of around 5 to 7 years, depending upon the size or the ticket size. So another question.
Maybe even longer, maybe even 10 years. If it's a manufacturing project with, let's say, a volume 20 million plus, with machinery that has a long lifetime, you can go up to 10 years.
Great. So that's a sweetener again. So Arjuna, my next question to you is, what is the optimal ticket size? What is the minimum ticket size we have to look for?
So the optimum ticket size, so the minimum is usually, well, on the one hand, from our side, from Ferrostal's side, depends a bit on how complicated the underlying transaction is, how many suppliers we have to bundle, how many currencies we have in the supply contracts. But ballpark figure is 8 to 10 million euros or dollars. This basically also coincides with the minimum ticket size from most of the banks, because the structuring, execution, and administration of an ECA loan is quite complicated. So most banks will start being interested in the transactions when you hit below 10 million euros or dollars. Additionally, of course, the bigger the volume, the more interest you can generate at the banks, the more banks you'll have in the beauty contest, the more competition, the lower the interest rate. But it shouldn't be less than 8 to 10 million euros.
Okay. And even if you have to do dollar financing, it is equivalent to 8 to 10 million euros?
Come again?
If it is a dollar financing, if it's contracts are in dollar, you still have 8 to 10 million euros?
Yeah.
Okay. And that would include only German content or all content?
The whole transaction. So for example, let's say if we take the 8 million euros and you have a client or some of the participants have a transaction that is an 8 million euro transaction with 4.5 million euros coming from Germany. You're above the 50%. The rest, let's say the others, 3.5 million come from Austria, China, and France. Then Euler Hermes will give coverage for 8 million euros, and you'll get financing for 8 million euros as well.
Okay, great. One quick question from the audience is, how about financing the import duty and the freight of the transaction? Is that covered?
Import duties, it depends a bit on the Incoterms that you agreed upon. That's more or less something that we need to check on an individual basis. So import duties, yes, to a certain degree can be included. Problem is always when we have some local content. VAT is always a bit tricky. I think with regarding to the freight costs can also be included. And what was the rest? Freight costs and import duties, right?
Import, custom duty.
Yeah, can be included.
Great. So next question, Arjuna, is at what point of time should we get you involved in the transaction? Because from the way things are currently, I think probably if we get you involved at the negotiating stage, probably we could try and get a better structure that will enable us to maximize financing. Is that correct?
That's correct. I think that the worst case scenario is you get us involved at a stage where the LCs have to be open tomorrow or next week. Then there isn't much. There's still some options, but it gets more complicated. The earlier you can get us involved, the easier it is. Main reason for that is that the supply contract has to follow some certain rules and regulations to be in line with ECA's mandatory minimum requirements with regards to the terms of payment, for example. So when you have the contract fully finalized and the OEM was not aware that you're thinking about getting an ECA involved, you might end up with terms of payment that are not fully in line with the ECA. So ideally is a situation as early as possible. It can be even as early that you're not fully settled on one single supplier yet. So when you can give us, if you have a very raw idea about what you want to do, you're in discussion with 2-3 suppliers from different countries, we can already start working in the background and see how we can maximize the volume eligible for ECA financing. So main takeaway, as soon as possible or as early as possible.
Great. One question from me. Now that the lockdown has resulted into slowdown and lack of business and all, Do you think at this point of time the ECAs will be able to turn around faster? Maybe they can, as an incentive for the imports to happen, is the turnaround time can be shorter, and also whether the prices can be negotiated better with the suppliers, considering that now things are just picking up, and the importers can get an opportunity.
Yeah. So as I think I mentioned in the beginning, that the main mandate, or the reason why we have something like ECA financing, is to promote exports, to help European businesses. So now the whole world goes through a very difficult time. The same holds true for Europe. And ECAs are all part of the stimulus packages that are hovering around in Europe. There were a few changes in policy enacted a few months back, well, at the very beginning of the lockdown. For example, with regards to Germany, which basically is completely in line with your question, Subbu. They decided to quicken the turnaround time, shorten the decision-making process, so you'll be able to get a decision from Euler Hermes or the other ECAs much faster than it was in the past. Another change of policy was that the ECAs will only look at your financials until December 2019. So their risk assessment will completely disregard first and second quarter of 2020 because of the very unusual times that we have worldwide at the moment. Regarding the negotiations with the OEMs, I cannot say much about it, but I'm pretty sure that, well, we're all going through a difficult time and we're all keen on doing business.
Arjuna, a quick idea on which countries the equipment should be originating from. So a lot of people have a mix, if I am doing any project, I will always have some part of European component, for example, and some local component also. So can this local component also be included in the ECA financing?
It can be included in the financing if it's part of the supply contract. So technically, yes, it raises some problems on the VAT side, because the VAT is not eligible for ECA financing. So you would need to find other forms of liquidity to settle the VAT. And there are some other caveats, but I think that's basically on a case-by-case basis. We can check if it's eligible. Of course, the main mandate for ECAs is to promote exports. So they will have a keen eye on why it is necessary to get this locally and not have it imported, and the amount of local contents that is eligible to be included is also limited to 23%. But if you can make a strong case at the ECA, you can. It's possible, yes. But again, on a case-by-case basis, we need to look what the situation is.
Okay.
One question has come as a WhatsApp. To what extent is the country rating relevant, or will impact the transaction or the pricing?
Yes, the country rating is relevant for the insurance premium. So the insurance premium that the ECA will charge is based on a few factors. That's the counterparty risk of the buyer or guarantor or whatever the structure is. So the counterparty risk, the country risk, the currency of the loan, and the length of the loan. So when you look at the second one, the country risk, this basically is reflected in the rating of the country. Yet the ECAs have a different rating system, so that they don't use the S&P Fitch Moody's system that we all know. They have a different rating system, and it's harmonized all over the world. And it's public information. You can check it out on the internet. There is, as it is decided on a multilateral level, there's a huge time lag when it comes to re-evaluation of countries. So when a country is developing very fast, very positively or negatively, you might see a time lag in up to 6 months before it is reflected in the rating. Yet I think in the current situation, as the world is struggling, so we have a global downturn, I don't know whether the individual country will see huge changes in their rating, because otherwise you would have to downgrade all countries, including Europe, including the European ones.
So everyone are at par as far as the rating downgrade. So
Yeah.
Yep. I will ask one question. Maybe Manish can reply. Sorry, Arjuna, can I ask him?
Yeah, no problem.
See, most of the Indian companies will have this thing in mind, whether this falls under automatic route of exchange control or you need a specific approval.
Well, it all is a function of what is the structure. So if we fit into if the ticket size is within 50 million and we satisfy all other criteria of RBI, this will definitely go under the automatic route. But as you know, automatic route means you have to make an application and the approval will be automatic. So that is the way it is. So you still have to make an application, you will automatically get the approval. So obviously RBI formalities have to be complied with. And I'm sure Arjuna can add to that, that all loans that we structure for India will be RBI regulation compliant.
Yes, correct. Yes, it's not a new product in the market, so RBI is well aware of it. There were numerous transactions. Yet, I think India is an interesting case because there were quite a few very large transactions with the large blue chips, large players in India. Yet when you look at the minimum ticket size of 10 million, it's also an interesting financing product for medium-sized enterprises. Yet it never really arrived in India that much.
Mm-hmm.
Maybe lack of information.
Awareness.
I don't know.
Absolutely, awareness.
Okay, one more question has come. Maybe it is repeated. If the import component is more from countries other than Europe, maybe the Europe component is less. How can it be structured?
It depends a bit on what the European part of the content is. As mentioned, all ECAs have different minimum requirements of content. So for example, okay, Germany is 51%, but when you look at the Austrian ECA, they will require us to have at least 30% Austrian and content. The French ECA will say at least 40%. The Swiss ECA will say also 30 to 40%. So when you have a situation where you have, let's say, 30% Austrian content and the rest is non-Austrian content, you might be able to structure a deal. So I would need to have more information on the actual individual content to be able to give a proper answer. But maybe it's possible.
Okay. Arjuna raised one question from the audience. So the question is, why is ECA required to be in picture for an importer when the importer has to deal with the bank and the supplier?
Well, the importer itself doesn't directly deal with the ECA. That's correct. But so like we as an exporter will do an application and the bank will do an application based on information that we receive from the importer. Yet the inclusion of the ECA dramatically reduces the financing costs for the importer. So that's why it's good to have them involved. I hope this answers the question.
Yeah, I think the logic is simple, that you may not directly deal with the ECA, but it is, if you know how it works, it is easy to facilitate a transaction so that the chances of your application going through are high, and we can ensure that the criteria that are required to be fulfilled by an ECA are complied with. Plus, an ECA financing will significantly reduce your cost of financing. So that is of great use.
Any other question?
Any other question, gentlemen? Yeah.
Okay. You know, one question coming, which are the typical industries, importing from Europe, like, the industries which may qualify or may have their equipment, mainly major component come from Europe, and that may qualify for the ECA financing from your
Yeah.
experience.
Yeah. So in principle, we are completely sector independent. Every single sector that requires imported machinery equipment is a potential sector for ECA financing. Of course, we see certain industries more often in our transactions than others. I think in the recent past, we were quite active in power projects, textile projects, pharmaceutical industry, food processing, packaging, steel. What else? We did a few tire projects for tire manufacturing. What else is there? Petrochemical industry. So basically, it's limitless. But these 7 to 8 industries are the brunt of our current portfolio.
Okay. An offshoot of that question, Arjuna, is any negative list?
Negative lists, meaning sectors that we are not involved in. So we don't do defense. And the other hand is when you look at, let's say, coal-fired power plants and nuclear-fired power plants, most banks are reluctant to give financing. And so basically they're not really blacklisted, but you just won't find a bank that's willing to grant a loan. So apart from defense, nothing.
Okay. So a lot of solar panel projects are being installed in India. So you think those solar panels, if they are imported from Germany, would be eligible for an ECA financing?
I think the problem with the solar panels itself probably come from China because there isn't much of solar panel production in Europe anymore. Yet, when you have the auxiliaries, substations, power lines, all the surrounding equipment, to a large degree still come from Europe. So, and that's, I think, when you look at the value-wise, the panel itself from China is no longer very expensive. Yet the surroundings are much more expensive. So therefore, when you look at the project, you might end up with a transaction that is from a let's say origin perspective eligible for ECA financing.
Okay. And for example, if you have a wind power project, and if the company who is executing the power project in India is a German company, some component may be German, some component may be sourced locally. Can this also be bundled by that company for the Indian supplier into an ECA?
If it's in line with the caveats that I mentioned earlier regarding local financing, it's definitely something that might be viable.
Great.
So there's not much question. We have last one question here. Yeah. There's a question. As said by, there will be a cost benefits if we engage ECA. That is, an importer can get hypothetical transaction cost benefits and other services which ECA can carry. What the question actually, Mr. Dhiral? Manit, can you just see the question?
Yeah. Okay. So he wanted cost benefit analysis. Is it possible to give a cost benefit or an example to the cost benefit analysis of an ECA transaction vis-a-vis an ECB? So, Dhiral, I will partly answer this question. So, you have three options for financing a term project in India. One is to take a rupee-based term loan from your banks in India. Secondly, you try and tie up an ECB. Or thirdly, you try and do an ECA back financing. So what you can do is, at any point of time, you can evaluate all the three options. And whatever is the cheapest for you is something you can actually go ahead with. What we have realized in the long term, generally the ECA is cheaper than the financing that is given under an ECB. And obviously, most of the times it is cheaper than term loan. More importantly, the ECA will have a much longer tenor which will be made available to you than you would have in terms of a term loan or an ECB. Plus, as Arjuna would have also has mentioned, generally the margin for a term loan is 25%, while the margin for an ECA is only 15% because that is the upfront payment to be made. ECB is something that can be negotiated, but generally it is again in line with the term loan, is 25%. The other benefit that we have is the security cover. And I will have Arjuna talk in terms of what is the security that is available or asked by the ECA back financing structure vis-a-vis others. So Arjuna, if you can throw a light on the security cover that is required by an ECA structure, that will be a very significant part in the cost benefit analysis.
Yeah. So the standard operating procedure regarding collateralization is either just a negative pledge on the finance equipment or a pledge on the finance equipment. But pledge only on the financed equipment. That means on top of that, there will be no hypothecation on all other or on all assets of the company or some other creative ideas that the local banks might come with. Also, personal guarantees are very, very uncommon in ECA financing. So it's just about pledge on the equipment. And I think coming back to your answer, Manish, I think you're completely right. As far as I remember, we when I was in Mumbai, we made a run through with a few numbers, and we reached a point where I think when it comes to 7 years repayment tenor plus, you end up that the ECA financing being competitive or more being cheaper than ECB or INR, and especially when you're at the tail end, let's say in a 10 plus 2 year region, you end up being much more cheaper.
Correct. So the big takeaway from Arjuna's answer is the security package. So the security package under the ECA funding is very light, vis-a-vis what typically a bank would ask in terms of a term loan on ECB. And that is the biggest advantage of doing an ECA. So that's a significant benefit over every other cost. Though it cannot be quantified in terms of basis points, I would say it is significant advantage in keeping a large amount of assets.
I don't know, one question come here. If an Indian entrepreneur, who's present in India wants to put a project in Africa or Indonesia, basically the equipments are going to be in that country. How will it qualify, or what will be the criteria in that case? Will it be similar as if an Indian company setting a project in India, or what are the criteria?
It depends a bit on who will be the counterparty risk. So let's say if it's an Indian company that has an independent subsidiary in an African country with their own balance sheet, and they buy the equipment and operate the equipment, then from the banks and ECA perspective, the counterparty risk is the African entity, meaning African country risk and the counterparty risk of the African entity. Of course, if it's, let's say, maybe it's a project or it is a newly established company in Africa, then there is no real balance sheet that can act as a counterparty risk on the African side. Then we would look into somehow of a guarantee structure. And then the counterparty risk will be the Indian company. Or the Indian company can act as a borrower and then ship it to Africa. That's also possible.
Okay.
So basically,
if it remains on their balance sheet, that's the important thing.
No, so if my subsidiary in Africa is doing the import, and I'm an Indian company, can I, as an Indian company, give a guarantee, provide a guarantee for the African entity, and then the risk shifts to my balance sheet rather than the African company balance sheet?
Correct, correct. So the risk and also the insurance premium will then be evaluated on the Indian guarantor, which has a few benefits. That usually the company will be financially much stronger, so the counterparty risk portion is lower, and depending on which country in Africa you're talking about, but there are a few countries in Africa where the Indian country risk is much better than the local risk. If the Indian company acts as guarantor, the insurance premium will also be calculated on Indian country risk.
Thanks, Arjun. I think we'll wait for a couple of minutes for a few more questions to come before we conclude this webinar. I think we can take questions offline. So I would request all participants, if they have any more questions, they can connect with us and we will be more than happy to answer those questions. Arjuna, I would like to take this opportunity to thank you for joining us all the way from Frankfurt and sharing your insights into ECA financing. Thank you very much. And it was really enlightening. And we hope, that it has kindled a spark in the participants so that they can look at the projects that they may be looking at in future and see how best they can exploit that opportunity on ECA financing. Thank you very much.
Thanks, Manish. Thank you, Subbu. Thanks to all of you at Greenback for giving me the opportunity to being here and then talking to all of you guys. It was really interesting. Also, the interactive nature, and I'm looking forward to being able to come to India in the near future to visit all of you in person.
All the best, Arjuna. Thank you.
Thanks very much. Have a great weekend, everybody. Thank you. Bye-bye.
Bye.
Bye.